Hello and welcome to another chapter on US taxation. So today we are here to explain about education credits, and we are going to cover two credit, specifically AOTC and LLC. Now that we have explained the earned income tax credit, we have seen how the tax system supports individual by rewarding the earned income and the work effort. But tax benefit are not limited to income support alone. The tax system also plays a crucial role in encouraging another key driver of the growth, which is the education. Because investing in education is not just a personal decision, it's an economic one. And to support this, the tax system provide specific benefits that help reduce the financial burden of learning and skill development. So these benefits come in the form of the education tax credit. In this chapter, we will focus on two important credit, which is American Opportunity Tax Credit and the Lifetime Learning Credit. Each of these credits is designed to support the different stages of education from undergraduate studies to the lifelong learning. So now let's dive into how these credits work, who qualifies, and how they can significantly reduce the cost of education while optimizing the tax savings. So let's move to the agenda slide and start the discussion. Okay, so the key agenda item that we're going to cover today as a part of this chapter is we're going to have a look at the education credit, the concept of the education credit. We'll spend some time in understanding the AOTC, which is American Opportunity Tax Credit, and the Lifetime Learning Credit. We'll spend some time to understand the calculation, phase out limit, if any, the condition, the eligibility criteria, everything, and then calculation of the education credit, and then the final takeaway slide. So let's start the discussion then. Okay. So first is introduction to the education credit. What are the education credits? So we discussed that there are two education credits that are available to an individual, which is AOTCs and LLC. Now we'll talk about each of them in a bit to have the better understanding and how it is helping the overall individual tax benefits. So what are the education tax credits? So education tax credit are the direct reduction to the tax liability, and it reduces the cost of the higher education and encourages the learning and the skill development. And this is like dollar to dollar tax saving. And purpose of education credit is to support the taxpayer investing in the college education, professional courses, and skill enhancement program. It promotes the long-term economic and the career growth, and the type of the education credits AOTC available for the first 4 years of the higher education. Maximum credit is 2,500 per student, $2,500 per student, which is partially refundable up to 40%. And lifetime learning credit is LLC is available for the unlimited years, and maximum credit is 2,000 per tax return. And when we look at it, the status of refundability, it is non-refundable. So while AOTC is partially refundable, LLC is non-refundable. So maximum credit for AOTC is $2,500 per student, LLC is 2,000 per return. Refundability is partial and this is not refundable for LLC. Duration is first 4 year of the education and LLC is unlimited. Student type is degree seeking course, LLC is any course. And who can benefit? Students or the taxpayer paying for their own education and the dependents education and must meet the income limit and the filing status rules. So we'll look the each of these credits separately to understand them more deeply. Now we'll talk about AOTC, which is the first credit within the education credit. Let's understand the concept of AOTC. So American Opportunity Tax Credit is a credit for a qualified education expenses and designed for the student pursuing the undergraduate post-secondary education, provide both tax reduction and the potential refund. So because while saying tax reduction is because the 40% of the amount is something which can be refunded, which is partially refundable kind of credit. So maximum credit is up to 2,500 per eligible student, and calculation is 100% credit is available for first 2,000 and of all the qualified expenses and 25% of the next 2,000. Refundability is partially refundable up to 40% refundable, which is maximum of $1,000. Remaining portion is non-refundable and can generate the refund even with the low or the no tax liability. So eligibility criteria is that student must be enrolled in the degree or the recognized program, be in the first 4 year of the higher education, be enrolled at least half of the time, not have completed 4 years already and must meet the income limits and have the valid SSN. What are the qualified expenses which should be included as a part of the AOTC? So tuition fees and the books and the course material, even if not required to be purchased from the institution. Not included is room and board and transportation and the insurance expenses. Income limit is full credit available up to 80,000 for a single and 1,60,000 for married filing jointly. And phased out beyond this limit is that qualified expenses is 4,000. Credit is 100% of 2,000 first, and second is 25% of the next 2,000, which is 500. So total AOTC is 2,500, and the refund portion is only 40%, which is $1,000. So this is a brief overview of how AOTC is calculated and what is the phase out limit, what is the criteria, and what are the condition to avail the AOTC credit. Let's move to the next slide. Okay, the second most important credit of our education credit is the LLC, the lifetime learning credit. It's a credit tax credit for the qualified education expenses designed to support higher education professional course skill development programs. The maximum credit is 2,000 per return. Calculation is the 20% of the qualified expenses. So, for example, if expenses incurred is 10,000, then out of 20% is something which is refundable or the credit is available. Maximum expenses considered is 10,000. Refundability, non-refundable credit cannot reduce the tax liability, can reduce the tax liability to zero, but cannot generate the refund. Student must be enrolled in the college, university, or the recognized institution. No requirement to pursue degree to be enrolled in the least half of time. Taxpayer must meet the income limits and having the valid SSN. So qualified expenses include the tuition fees requirement for the enrollment, not included books unless required to be paid by the institution, room and the board and transportation expenses, and the income phase out limit is full credit available up to 80,000 for a single and 1,60,000 for married filing jointly. And gradually phase out beyond this limit. Uh, Calculation expenses, if qualified expenses is 8,000, credit is 20% of 8,000 and it is 1,600. So this is how LLC is calculated and the benefit is given to an individual. So let's spend some time in understanding the calculation of both the credits, education, AOTC and LLC. So education credits are calculated based on the qualified education expenses. Applicable credit rates are income phase out limits, two separate calculation method. AOTC is the American Opportunity Tax Credit and LLC is the Lifetime Learning Credit. So step one is that we have to identify the qualified expenses. So include the tuition, mandatory fees, books and the course material. Exclude room and board, transportation and personal expenses. Step two, select the applicable credit. So AOTC is credit which is undergraduate first 4 years. LLC is the flexible any education level. Formula for AOTC is credit us 100% of first 2,000 of the expenses and 25% of the next 2,000 of the expenses, which is maximum is 2,500 per students. For example, if expenses are 4,000, then 100% of 2,000 is allowed, 2,000, and 25% of next 2,000 allowed, which is 500. So total AOTs is 2,500. Refundability is only 40% of refundable, which maximum 1,000 and remaining is non-refundable. LLC calculation is credit is 25% of the qualified expenses, maximum expenses is 10,000, maximum credit is 2,000 per return. If example, and we can take expenses as 8,000, then 20% of 8,000 is 1,600, which is the maximum allowed for that particular individual. And then we have to apply the phased out limit, which is 80,000 for single and 1,60,000 for married filing jointly. Final application of the tax calculation is that compute the tax liability, apply the education credit first non-refundable, and then apply the refundable portion, which is the AOTC. Formula for AOTC is tiered, which is 100% plus 20%. LLC is 20% flat. Maximum credit is 2,500 for AOTC, is 2,000 for LLC. Refundable is partial for AOTC and no refund for LLC. And AOTC is per student, but LLC is per return. This is the key difference between both of them. So I think this gives us the complete understanding of both the AOTC and LLC, and then we are largely come to the end of this chapter. Let's move to the final slide, which is the key takeaway slides, and we'll wrap up this chapter then. Okay, so some of the key takeaways for this chapter is education credit provides direct reduction in the tax liability, which is dollar by dollar, designed to make education more affordable, and two key credits are AOTC and LLC. Choosing the right credit is the key. Use AOTC first for year of the education, and then LLC for the professional courses. We have to make sure that LLC has to be consumed first because it is non-refundable, and then we'll apply the AOTC. Calculation matters, tiered calculation for AOTC and flat calculation for LLC, based upon the student status, income status, and the filing status. So, and then they have to have the valid SSN, and Form 1098T is required. So this comes to the end of the chapter. Let's move to the final slide and see what all we are going to have in the next chapter. Okay, now that we have covered the education credits, AOTC and LLC, one key insights should stand out. The tax credits are not just financial tools, they are designed to support the different life goals, whether it is the family support, income stability, and the education. So far, we have seen that how tax system supports the families through child tax credit, workers through EITC, and students through education credit. But what happens when income is earned beyond the domestic boundaries? What if taxpayers paying taxes not just in the US, but also in the another country? This introduces a new chapter, which is like double taxation. And to address this, the tax system provides another important credit, which is the foreign tax credit. So next, let's move to the foreign tax credit and understand how it's going to help us to avoid the double taxation. So we're going to come with that chapter very soon. Until then, thank you, goodbye, and stay connected.